Wait. Just wait 1 second before you scroll past this. While you've been watching XRP bleed, while you've been staring at red candles and wondering if this market is ever going to turn around, something happened this morning that most people in crypto haven't even talked about yet. And by the time they do, the best entry prices will already be gone. Today, the 8th of June 2026, CME Group, the largest derivatives exchange on the planet, officially launched the Nasdaq CME Crypto Index Futures. The first ever market cap weighted crypto index futures contract in CME's history. And inside that index, there are 7 coins: Bitcoin, Ethereum, Solana, XRP, Cardano, Chainlink, and Stellar XLM. 2 out of our 3 are in there. Right now. Officially. If you don't fully understand what that means yet, stay with me. Because I'm going to explain why today might be one of the most important dates in the history of XRP and XLM. And why HBAR, which is not in this index, is still a story you absolutely cannot ignore. First, what is CME and why does this actually matter? A lot of people hear CME and think, okay, another exchange, another futures product, so what? Let me put this in the right perspective. CME Group is not Binance. It's not Bybit. It is not a crypto exchange for retail traders. CME is the Chicago Mercantile Exchange, the world's largest financial derivatives marketplace. This is where hedge funds with hundreds of billions of dollars trade, where pension funds trade, where insurance companies, corporate treasuries, and institutional asset managers operate players who legally and structurally cannot use Binance because of regulatory requirements, compliance obligations, and fiduciary responsibility to their clients. Before today, those players could access Bitcoin through CME BTC futures launched there back in 2017. Then Ethereum. Then in February 2026, CME added individual futures contracts for XLM, ADA, and Chainlink. But today is something fundamentally different. Today, for the first time in CME's history, institutional investors can get diversified exposure to the entire crypto market through a single regulated contract. 1 instrument. 7 coin. Market cap weighted. Dollar settled. Cleared through CME clearing. With all the regulatory infrastructure that serious institutional money requires, this is not just a new product. This is a new category of institutional capital that can now legally and conveniently enter a market where XRP and XLM both sit. What exactly launched today? Breaking down the details. The Nasdaq CME Crypto Index Futures contract is tied to the Nasdaq CME Crypto Settlement Price Index. Settlement is in US dollars, no physical delivery of coins. The contract is available in 2 sizes, a standard contract and a micro contract. That micro size is important because it doesn't just serve massive funds, it opens the door to a much broader range of institutional participants who want smaller, more precise exposure. Now here are the exact weights of each coin in the index. Bitcoin holds 76.96% of the index. Ethereum is 12,68%. XRP comes in at 5.8%. Solana is 3.23%. Cardano is 0,65%. Chainlink is 0,37%. And Stellar XLM is 0.3%. Those are the 7 coins. Those are the real numbers. And the obvious question, where is HBAR in this list? It's not there. And we're going to talk about exactly what that means and why it's not the disaster it might seem. XRP at 5.8% of the index, what this means in practice. 5.8% might sound modest. But let's think through the actual logic of what this creates. When an institutional fund buys a CME crypto index futures contract, they are getting exposure to XRP proportional to its weight in the index. Every time an asset manager in New York, London, or Singapore decides to allocate a portion of their portfolio to crypto through a regulated instrument, they are indirectly buying XRP. Not because they specifically chose XRP, but because XRP is now a component of a standard institutional index product. This is called passive institutional demand. It's exactly how equity index funds have worked for decades. When a company gets added to the S&P 500, index funds are required to buy it. The price goes up not because someone manually decided, "I want this stock," but because billions of dollars in passive flows automatically go there. XRP is now inside a CME crypto index. That is the first step toward the same mechanism. And look at the context right now. XRP is trading around $1.08. That's roughly a 19% drop from the $1.33 level it was at on May 31st. The short-to-long ratio on XRP derivatives is 9-to-1. The market is as oversold as it's been in months. And at precisely this moment, CME is opening the gates to institutional capital. That is not a coincidence. That is how markets work. XLM, small weight, massive significance. Stellar XLM has a 0.3% weight in the index. That's the smallest allocation of the 7 coins. And I hear the question, why should I care about that? Here's why. Legitimacy is not about the size of the percentage. It's about the fact of being included at all. When XLM was added to a CME index alongside Bitcoin and Ethereum, that is official recognition at the highest institutional level. CME and Nasdaq ran a rigorous methodology. They looked at liquidity, reliability, regulatory standing, and technology. Stellar passed that filter. That says something very significant about where XLM stands in the eyes of the most serious financial institutions in the world. And remember what happened in May. XLM surged more than 50% in a matter of days on institutional news. The pullback came with the broader market. XLM is now trading around $0.19. But that move showed exactly how violently this coin responds to positive catalysts. Today's CME launch is the most positive institutional catalyst XLM has seen. The fundamentals back it up too. The Stellar Development Foundation is actively building in real-world asset tokenization. Tokenizing bonds, real estate, and funds on Stellar rails is happening right now, not in a future roadmap. The CME inclusion adds an institutional layer on top of that existing story. HBAR, why not being in the index is not a failure. Let's be direct. HBAR is not in the Nasdaq CME crypto index. That's a fact. And I know HBAR holders are reading this and asking, is that a bad sign? No. And here's the reasoning. The index is weighted by market capitalization. At the time the methodology was established, HBAR's market cap of approximately $3.4 billion simply did not reach the threshold needed for meaningful index representation. CME did not reject Hedera, they built the index by the math. Second, the CME and Hedera story is not over. CME has been consistently expanding its crypto product lineup. Just in February 2026, they launched individual futures contracts for XLM, ADA, and Chainlink coins that had zero CME presence not long before that. Hedera, with a governing council that includes Google, IBM, Boeing, Deutsche Telekom, and LG Electronics, is one of the most institutionally backed projects in the entire crypto space. It is not at the back of the line for future inclusion. Third, and this is the critical point, HBAR is in the phase that professional traders call accumulation before recognition. Price sitting at $0.08. Market cap of $3.4 billion versus XRP's $65 billion. Technology capable of over 10,000 transactions per second, with finality in 3 to 5 seconds, and fees measured in fractions of a cent. The infrastructure is there. The institutional recognition at the CME level is not there yet. That is not weakness. That is opportunity. Because when HBAR does get that recognition and with these partners, it is a question of when, not if the price will already be different. The historical parallel. What happened to Bitcoin after CME in 2017? This is important context. When CME launched Bitcoin futures in December 2017, the price was already elevated, the market was overheated, and what followed was a significant correction. A lot of people at the time said, "See, futures killed Bitcoin." But what happened next? Bitcoin returned to $20,000 at the end of 2020. Then $69 in 2021. Then new all-time highs beyond that. The CME futures launch did not kill Bitcoin. It built the infrastructure for institutional capital to enter, and that institutional capital eventually drove price to levels that seemed impossible in 2018. XRP and XLM are getting their analogous moment right now. The market is in a pullback. A new institutional product just launched. Historically, this is exactly the zone where smart money accumulates while retail investors are selling out of fear. Which side of that trade do you want to be on? Clarity Act plus CME, a double catalyst. Now look at the full picture for XRP specifically. There are two parallel catalysts running simultaneously right now. The first is today's CME launch. The institutional infrastructure is live. The second is the Clarity Act. This is legislation moving through the United States Congress designed to give crypto assets a clear, definitive regulatory classification. XRP is in a stronger position than almost any other coin here. Ripple went through years of litigation with the SEC, achieved a partial legal victory, and has built more regulatory preparation than any other project in this space. When the Clarity Act passes, and the probability of passage has been growing, XRP will have two foundations in place simultaneously: regulatory clarity and institutional demand through the CME index. Add the 9-to-1 short ratio that creates the conditions for a violent short squeeze. That is 3 separate growth mechanisms converging at the same time. That kind of setup is rare. What to actually do right now? Enough analysis. What do you do with this information? Number 1. Do not panic sell into this dip. XRP at $1.08, XLM at $0.19, HBAR at $0.08. These are all zones where buyers have historically appeared. Selling now means selling exactly before a potential institutional-driven reversal. Number 2. Watch CME futures volume in the next 24 to 48 hours. The first days of trading a new instrument are telling. Strong opening volume means real institutional interest is flowing in. That will confirm whether today's launch is as significant as the setup suggests. Number 3. Know your levels. For XRP, support is in the $1 to $1.08 range. First resistance is $1.30. Further targets are $1.50 and $1.73 in a bullish scenario. For XLM, critical support sits at $0.136 to $0.139. Recovery toward $0.25 is realistic with institutional flow. For HBAR, the $0.07 to $0.09 zone is accumulation territory. July 2026 price targets range from $0.14 to $0.20 as momentum builds. Number 4. If you have available cash, dollar cost average. Small positions at each support level. No emotion, no all-in bets, just a systematic plan that brings your average entry price down over time. Something real happened today. Not a rumor. Not a crypto influencer tweet. CME Group and Nasdaq, two of the most serious financial institutions in the world, officially opened institutional doors to a market where XRP and XLM both live. The market is red right now. It feels uncertain. It feels scary. That is exactly what the best entry points in history have always felt like. I hold XRP, HBAR, and XLM. I'm looking at this picture. And what happened today made me more confident in these positions, not less. Drop a comment below. How are you reacting to the CME news? Are you buying, holding, or still on the fence? I genuinely want to know what our community is thinking. Subscribe if you haven't already. I publish daily analysis on exactly these coins every single day. See you in the next one.